What's up, guys? Alvaro here, and welcome to the bilingual stock market channel again. Let's go ahead and talk about some stocks and about what happened today in the markets. And today we had, yet again, another red day in the markets. Guys, today gold went down, oil went down, Russell 2000 went down 2.29%, Nasdaq went down 1.40%, Dow Jones pretty much broke even, but it also went down 0.02%, and the S&P 500 went down 0.54%. And check this out, guys. The advances and declines distribution. Today we had 1,748 stocks going up, and we had 5,695 stocks going down. A nasty day across the board, no doubt about it. And let me show you the sectors of the markets quickly over here. So the best performing sector today was energy, going up 1.09%. And check this out, guys. I am going to pull up here the January chart, okay? So unless you have invested in energy stocks or the energy ETF XLE, you are down in January, no doubt about it. So energy is the only sector of the markets that is up during this horrible month of January. It is up 18.76%. The other 10 sectors of the markets, all of them, the inflation trade, the defensive sectors, needless to say, technology, consumer discretionary, all of those sectors are down in January. It has been a very, very tough month for the markets, no doubt about it. Obviously, because we have a bunch of fear about what the Fed is going to do when it comes to hiking interest rates. And check this out, guys. I wanted to show you this chart. The markets as of now, okay, because we found out yesterday that the Fed is going to carry out the very first interest rate hike in March, most likely. The markets are 100% convinced that the very first interest rate hike is going to be announced during the Federal Open Market Committee meeting of March. So that's fine. So the markets as of now, guys, are doing what they usually do before a new cycle of interest rate hikes begins. So check this out. This purple line that you guys can see over here is the interest rate of the US. And this orange line is the S&P 500. So here we can see the beginning of the interest rate hike cycle back from 2016. And as you guys can see over here, before the Fed actually started to hike interest rates back in 2016, the markets were very volatile. However, once the Fed started to hike interest rates, as you guys can see over here, take a look at how this purple line goes up, the S&P 500 also went up. So the markets, and this is something that Jerome Powell said in the press conference yesterday. So the markets, for the most part, move ahead of time when it comes to a new cycle of interest rate hikes. And this is what is going on as of now. So we can make the case. This is Alvaro over here trying to see things glass half full. Obviously, any bear out there would say that I am crazy, that I am a perma bull, whatever. You guys know. But if history happens to repeat itself, we are very likely to keep on seeing a lot of volatility until March. Once the Fed says, okay, guys, this is it. I am going to carry out my very first interest rate hike. I think that we are going to increase interest rates probably, or I think that we are very likely to carry out 4 or 5 interest rate hikes. Then the markets should start to go up, unless the inflation, the drama keeps on getting worse, and you guys know the rest of the story, right? So what we are seeing as of now, this extreme volatility that we are seeing nowadays is basically what the markets usually do when we are about to start a new interest rate hike cycle. So let's see what happens. You guys know that on February 10th, we have the CPI data report that is going to be very important. And on top of that, guys, because as I just told you, we had a very nasty day, as you guys can see over here. Today we had a situation in which good news is bad news. And why? Well, because today we got the Q4 GDP report, and it came out way better than expected. GDP for Q4 of last year rose 6.9%, well above the 5.5% estimate. And we also got jobless claims coming out way better than expected, because jobless claims came out at 260,000 new claims, 30,000, which implies that we had 30,000 fewer claims relative to the week prior. So that is a sign, and this is something that also Jerome Powell highlighted yesterday. We have clear signs that the economy is doing pretty well, and that implies that the economy could keep on getting overheated, and that implies that we might see more inflation. And that obviously is something that spooks the markets, because if inflation keeps on going up, then we know that, and that is something that Jerome Powell let us know yesterday in a very clear way. The main priority of the Federal Reserve as of now is the real economy, not the stock market. And he also said that the real economy is being affected in a very negative way by high inflation. So this good news ended up being bad news for the markets, and therefore we had a terrible red day all across the board. Let's see what happens in February. Remember, guys, the very next important economic data that we are going to get after the Federal Open Market Committee that took place yesterday is going to be the CPI data report on February 10th. And before going over the indices, guys, I want to show you some trades that I took in today's trading session. Today I had a very active trading session. So Netflix, I was able to take 2 successful day trades on Netflix. So this morning I purchased 35 shares at $380.50, paying $13,317.55, and I ended up exiting this trade at $385.14, and I was paid $13,479. I ended up making over here $162. And I also, and as I just told you, I took a second successful day trade on Netflix. So later on today, after I closed the day trade that I just showed you, I re-entered Netflix because Netflix went up to $390, then it retraced. And when it visited $382, $383, give or take, I opened a new position with 30 shares, paying $11,488. And then I exited this trade at a higher price relative to the first day trade that I closed. So I exited this trade at $388.48, and I was paid $11,654. I ended up making over here $170. So I ended up making something like almost $300 with the 2 day trades that I took with Netflix. And let me show you, this was the trade of the day, guys. Let me show you Tesla. So you guys know that I am a long-term investor in Tesla. I own more than 100 shares. So on January 24th, this was 3 days ago, I sold a covered call with this was a leap actually. This is a call option that had a strike price of $2,000 that expires on January of 2024. So when I sold this covered call, I was paid $12,970. I was expecting Tesla to drop after earnings, to be honest with you. I was pretty much sure that the markets were going to be very demanding with Tesla earnings-wise, and that's exactly what happened. So thanks to the drop that we saw in Tesla today, I was able to buy back the covered call that I had sold, and I paid $11,650, guys. I ended up making over here on a trade that took me 3 days, $1,320. But I did more, guys. So let me show you over here. I also bought back a covered call of Lucid Motors, and I ended up making over here like 100 and something, I think. Let me see. In the case of Lucid, I sold 150 bucks, I think I made here. Yeah. On January 7th, I sold the $55 call that expires on May 20th, and I was paid $300, and today Lucid fell off a cliff. Most of the electric vehicle manufacturers had a very tough day because Tesla said that they are facing a bunch of issues with disruptions in supply chains and stuff. So I was able to buy back this call paying $171. So I ended up making over here $130, and I also sold a leap, guys, of Marathon Digital. And in the case of Marathon Digital, let me see, what call did I sell over here? So I sold the $50 call that expires in January of 2024, and I was paid $620. So despite the fact that we had a very tough day in the markets, I was able to take a bunch of successful trades. And now let's go ahead and take a look at the S&P 500, which, and as I said in the introduction of this video, went down today 0.54%, and it closed today's trading session at $4,326. Guys, this chart couldn't look nastier. A total mess. Below the moving averages, this 50 SMA and this 180 SMA. The 4-hour chart also below this 100-day moving average, also below this 200-day moving average. So this is a total mess. And on top of that, we're seeing over here a clear bear flag, guys. Take a look. So we have the stick and we have the flag over here. So for the bears, in order to be able to complete this bear flag, they need to take on 4,220 points. This is a lower support that acted as such back in Monday of this week, back on last Monday. So can the bears take on 42.22 and by doing so completing this bear flag? If that were to happen, guys, we could see a drop in the S&P 500 down to 4,150 points. We are talking about a former support back from mid-June of last year. So this would be obviously the best case scenario for the bears out there. And in the case of the bulls, for them, in order to be able to invalidate this bear flag, they need to burst above the 200-day moving average at 4,428 points. So let's see what happens here, guys. Obviously, the sentiment of the markets of the markets in general terms is very bearish, but the bears have a very tough task ahead of themselves, guys, taking on 42.22. So either thing is going to happen. So we are either going to see the bulls taking on this 200-day moving average and maybe filling the next important gap up to 4,500, a previous area of support back from early December, or maybe we could see the bears taking on 42.22, in which case, oh boy, this is going to be very bad news for the bulls out there, because as I just said, we have another leg down, guys, most likely down to 4,150 points. And now let's go ahead and take a look at the Nasdaq 100. The Nasdaq 100 looks worse than the S&P 500, and we can also see a bear flag over here, guys, a clear bear flag. So what would need to occur for the bears of the Nasdaq 100 in order to complete this bear flag? They need to take on 13,900 points. 13,900 points also happens to be a former area of resistance back from early June. If they can take on 13,900 points, then the next leg down will take the Nasdaq 100 down to the lower support of last Monday at 13,734 points, which also happens to be a former area of resistance back from late May. So this would be obviously the best case scenario for the bears out there. In terms of the task that the bulls of the Nasdaq 100 would have to carry out in order to invalidate this bear flag. This looks like a very tough task, guys, given the current market conditions. So the bulls need to take on 14,658 points. We're talking about a former area of support back from early October. So what is going to happen first? What is going to be the final outcome of this bear flag? Is it going to be invalidated with the bulls bursting above 14,650 points? Or are the bears going to be able to complete this bear flag by taking on 13,900 points? If you ask me, guys, the likelihood for this bear flag in order to be completed is very high, guys. Is very high. So I think that we'll still have room to the downside in the case of the Nasdaq 100. And obviously, guys, let's see what happens tomorrow. Let's see what happens. What is going on today with the earnings of Apple, and let's see what the reaction of the markets look like tomorrow, or what the reaction of the markets looks like tomorrow, because Apple should have already reported earnings, and you guys know that this is the most important stock of the whole stock market, and Tesla beat on earnings yesterday, bottom and top line. I think that they provided a very solid guidance, and the markets stated, or most analysts out there stated that Tesla didn't provide any specific guidance about new products. I was like, why should Tesla provide any guidance about any new products? Tesla is a car manufacturer or a tech company or whatever you guys want to call it that sells every single vehicle they make. Tesla stated that they are going to increase its sales at a 50% growth rate with a multi-year horizon. So why are the markets concerned about Tesla rolling out or about Tesla not announcing any new products when we are talking about a company that sells every single vehicle they make? Whatever, that's the markets being irrational. And remember, the markets can remain irrational longer than you and I can remain solvent. So if Apple happens to report good earnings today, I haven't seen anything. Let's see what is going on here with Apple. Then we can make the case. And Apple is up after hours. This could be an important boost. This could avoid this could prevent the bears from completing the bear flag that I just showed you in the Nasdaq 100, at least in the short term. Let's see what is going on over here. So Apple is up a lot after hours. Good news for my dear bulls out there. Apple is up 4% after hours. So let's see what is going on over here. What did Apple report? Let's see. Do I have the information handy? Thinkorswim. Oh, I have a lot of information over here. So what is my EPS? What is my revenue? Let's see. Okay. EPS came in at $2.10, beating the estimate of $1.88. This was a very decent beat. And sales came in, this is unbelievable, guys. Sales came in at $123.9 billion, beating the estimate of $118.28 billion. A huge beat across the board, guys. So Apple wouldn't project beyond current quarter on supply chain issues, said Tim Cook. Let's see Apple's supply chain problems to lessen in current quarter. That's good. That's good news. CEO Tim Cook says in interview. Okay, quarterly result. Do we have any specific guidance when it comes to EPS or revenue for the next quarter? Let's see over here. No, I don't see anything specific guidance related. So Q1 iPhone sales of $71.6 billion versus analyst consensus of $68.4 billion. So that's a very nice beat, right? And what else do we have here? Sales in China. So Q1 2022 America sales $51.49 billion. Europe sales, I don't have any competitive over here. So it looks like they reported very good earnings. I mean, it doesn't look like they reported very good earnings. They really killed it. And they say that, okay, this is beyond what bulls were hoping for, said Wedbush analyst Dan Ives on Apple's Q1 earnings. And what else? And Apple wouldn't project beyond current quarter on supply chain issues. So they don't want to project anything because of supply chain issues. But they also said that Apple's supply chain problems will lessen in current quarter. So that's fine. That we can say that evens it up, right? So nice report from Apple, guys. This is positive for the bulls. Obviously, this is not good news for the bears out there. No doubt about it. I guess that they had their fingers crossed, hoping for Apple to miss on earnings, but that wasn't the case. That's good news. Okay. So as of now, guys, Apple, and from a technical standpoint, the stock of this company is making a test of this 50 SMA on the 4-hour chart at $166. $166 also happens to be a former area of resistance back from November 22nd. So I'm thinking, guys, that if tomorrow the bulls of Apple start to consolidate slightly above this 50 SMA on the 4-hour chart, so let's say slightly above $165.50, $167, they might gather momentum in order to make a push higher and potentially they might potentially able to fill the next gap up to $170. $170 happens to be a former area of resistance back from early December. So if Apple were able to make this push to the upside from $165-ish up to $170, we are looking at a 2% profit trade, nothing to complain about. So very solid earnings for Apple. And let's see, guys, this is the most important stock inside the stock market, and this is definitely good news for the bulls out there. And Robinhood Markets also reported earnings, and I think that this earnings report is gonna be nasty. And it was. Oh yeah. Robinhood is falling off a cliff, guys. So Robinhood went down today during regular trading hours 6.45%, and it closed today's trading session at $11.61. I am going to pull up here the 1-day 1-minute chart, and it is down. It is down. Let me see. So it closed at $11. It is down. Yeah, it is down 14%. Something, like regular. This is regular price action for Robinhood. So Robinhood, as of now, is, let me see, guys, it is 90% of the highs. Wow. Is Robinhood going under, guys? I don't know. Let's see what they reported here. So, okay, let's see if I have the information handy. 4 p.m. Okay. So Robinhood Market sees Q1 revenue of less than $340 million. Robinhood Market expects Q1 sale. Okay, Q4. So EPS negative, obviously. This is not a profitable company yet. Came in at negative 49 cents, missing the estimate of 45 cents. And sales came in at $363 million, beating the estimate actually of $362.14 million. So they beat on sales, but they slightly missed the estimate when it comes to EPS. But I think that there must be something wrong when it comes to guidance, right? Let's see, what do I have here? Guidance related. So, okay, monthly active users in Q4 were at 17.3 million users, up 48% from a year ago. So that's an acceptable figure, right? However, analyst consensus on Visible Alpha were at 19.8 million active users. So they missed by a long shot, guys, when it comes to monthly active users. And okay, so Q1 revenue, or Robinhood Markets sees Q1 revenue at less than $340 million versus analyst consensus of $439 million. Wow, guys. They are really posting a very weak guidance. And that's the reason why Robinhood is down after hours. And let's see, because you guys know that most of the revenue of Robinhood comes from crypto trading. So do I have any information about crypto trading over here? Let's see, lower. Yeah, Robinhood Q4 earnings highlights. Lower monthly active users and crypto revenue. Updates on crypto wallets and plans to extend trading hours. Whatever. That's just, So, Robinhood Markets, guys. What can I tell you? There's nothing to do over here. Most of the bubbles, guys, when they burst, and we can make the case that Robinhood was a bubble when it hit $85. So when a bubble bursts, most of the assets or stocks or whatever happens to be affected by a bubble burst usually bottoms out at 80% of let's say the area in which the bubble burst. But in the case of Robinhood, guys, that rule or that information doesn't apply, because Robinhood is as of now 90% of the highs. So it can keep on going lower, guys. I wouldn't be surprised at this pace, guys, that Robinhood ends up becoming a penny stock. I wouldn't be surprised at all. And on top of that, Robinhood is it's carrying out its business model in a very competitive market, guys, when it comes to stock market brokers and crypto brokers. So, yeah, Robinhood has a bunch of competitors out there that are doing things way better than Robinhood. So, wow. Terrible earnings report for Robinhood Markets, no doubt about it. And the third stock of this video is going to be Netflix. And in the case of Netflix, you guys know that Bill Ackman announced yesterday that he purchased 3 million shares of Netflix. And guys, the stock market for some people is very easy. So this guy just, I think that he filed a form to the Securities and Exchange Commission, or maybe he tweeted it. I don't know exactly what happened. Do I have the information here? So he let us know that he purchased 3 million shares of Netflix. That's what he did, right? And the stock soared today, guys. It went up 7.51%. So that's an easy one. So you let the public opinion know that you're buying a stock, and that's it. The stock goes up 10%. That's an easy one. Yeah, that's for him, it's very easy being an investor, obviously, right? So Netflix went up today 7.51%, and it closed today's trading session at $386.70. You guys know that I took a couple of successful day trades on Netflix today. However, Netflix is still going to be on the very top of my personal watch list tomorrow. So I'm thinking, guys, let me pull up here the 3-year chart, I think. There you go. So take a look at this, guys. $385 happens to be a former area of resistance back from February of 2020. And we are also talking about a former area of resistance back from May, guys, of 2019. So in the case of Netflix, we are seeing pre-pandemic levels. And mind you, obviously, Netflix is not the same company that it was before the pandemic, but that's the way that things are going on as of now in the markets. So if I happen to see Netflix tomorrow starting to consolidate slightly above $385, I am very likely to try to take another day trade on Netflix, because since Bill Ackman purchased 3 million shares of the stock of this company, we can make the case that we had a shift in momentum when it comes to Netflix. So a process of consolidation slightly above $385 might be a sign that the bulls are gathering momentum in order to fill the next gap up to $416, guys. This would be a very, very interesting trade. No doubt about it. $416 happens to be a former area of support back from June and May of 2020. So if we were able to take this trade from, let's say, $386, $387 up to $416, we are looking at a 7% profit. So watch out for Netflix, because $385 is a very important spot from a technical standpoint. And I think that since we had a shift in momentum, and obviously, guys, if the Nasdaq 100 and the S&P keep on falling down, then that is obviously going to affect Netflix in a very negative way. But if we happen to see a spike in the Nasdaq 100 tomorrow, because Apple reported very good earnings, I wouldn't be surprised if Netflix is able to fill this next gap up to $416. And the last stock of this video is going to be Fedex Corp. And in the case of Fedex, I'm going to pull up here the 4-hour chart. So Fedex went down 0.51% and it closed today's trading session at $241.93. Guys, in my opinion, this is a blue chip stock. This is a stock that the markets should be interested in buying given the current conditions of inflation fears, uncertainty about interest rates, and so forth. And why? Well, because this is a company that has a free cash flow. This is also a company that is predictable when it comes to revenue, when it comes to earnings. So I think that the markets are being a bit unfair when it comes to Fedex. Fedex is trading as of now 25% of the highs. So I'm thinking that if the bulls can take on this 180 SMA on the 4-hour chart near $249, and mind you, $249 happens to be a former area of resistance back from early December, they might be able to fill the next gap up to $255. $255 is a previous area of resistance back from mid-December and also back from mid-November. So if we were able to take this trade from, let's say, $250, $251 up to $255, we are looking at a 2.50% profit. Nothing to sneeze at. And take a look at the RSI of FedEx. It is at 41 points, very healthy from a technical standpoint. We can make the case that FedEx is neither oversold nor overbought. So watch out for FedEx bursting above $248-ish. And with FedEx, I am going to wrap up this video. Thank you very much for your attention, and thank you very much for hanging out with me once again. Remember and keep in mind, guys, that here on the Bilingual Stock Market channel, we are posting stock market update videos Mondays through Thursdays. No, Mondays, Tuesdays, and Thursdays, because on Wednesdays, I am not being able to post any other videos, guys, because I am live on my Patreon all day long. So we are posting stock market update videos Mondays, Tuesdays, and Thursdays as well. So if you want to get all of the notifications of all of our videos in a timely manner, you have to be subscribed to this YouTube channel, but you also need to activate the notification bell right up there. Follow us on Instagram as well, guys, at Bilingual Stock Market. And remember that this is the Bilingual Stock Market channel, the YouTube channel in which we talk about the markets, but we do things differently because we talk about the markets in 2 different languages, English and Spanish. So you can pick your preferred language, but most importantly, this is the YouTube channel in which we know that the wonderful world of Wall Street is not for geniuses, it is for entrepreneurs just like you guys and myself. My name is Alvaro, and I will see you guys on Monday once again, 3 or 4 hours after the market closes. Peace out.